All right, good morning. How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders just like you. Today we're going to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, so how you doing? What's going on, my friend? Hey, did you click the thumbs up button yet? I know it's only been 2 seconds, but why not? All right, cool. So what are we going to do today? Well, we got some retail sales coming out, so we probably should discuss how that fits in the GDP. We had Bank of Japan yesterday. I prepared the day trading group for that and discussed it at length. If you have questions about why the yen is so weak this morning, I guess we can talk about it now that it's happened. But again, I talked about it yesterday before it happened. But cool, you should know that. What else is going on? Well, whatever you want to talk about. Maybe we have a recession coming. Maybe it's deferred or delayed, or maybe it's never coming. Well, we could talk about that. There's a lot going on in the world, and it's a good time to be a foreign exchange trader. So welcome to Forex.Today. In the description below the video, there is access to resources. One of them is the book I wrote many years ago, and it's still probably a pretty decent book. I think so. It's an honest book. So anyways, if you already own it, would you please leave a review? I'm assuming since I wrote it more than 10 years ago that you bought it long ago. But could you leave a review on Amazon.com? I would appreciate that. Shouldn't take you too long, even just a few lines. That'd be great. Below that, you'll find a link to FXBootcamp.com. It's a community that I've been leading for about 20 years. There's real education, real helpful resources. It's not very expensive. I don't price it to become a millionaire selling training. It's $88 a year for 88 hours of information. I've added the oil trading course. So if you want to know the difference, let's just say, if you want to know what fracking is, you will know step by step how fracking works, including the actual equipment. You'll know a lot. And that's part of FX Bootcamp. The $88 a year includes that. Very cool. So join FX Bootcamp. Also, you'll find a link to tradersway.com. We all need a broker. I've worked with many over the years. I've been working with Traders Way now for 8 years, I think. They earned my loyalty and respect through their behavior in the marketplace. This behavior indicated to me that they really are an ECN. They really are a straight-through processing broker. Many brokers were promising such business models, and then they suddenly went out of business, which kind of hints towards those other brokers were actually not straight through processing ECN non-dealing desk type brokers, which is a fancy way of saying, yeah, they were taking the other side of your trades. Traders Way didn't do that. They were never in trouble when the Swiss National Bank pulled the plug on the peg. So Traders Way proved in the real world they're an actual straight-through processing ECN brokerage firm, and they were not negatively impacted by the Swiss National Bank. Other big banks or other big brokers you've heard of went out of business that day. Not tradersway.com. Boom. That was that. That earned my loyalty and respect. On top of that, fast execution speed, narrow spreads, huge swaps. I'm telling you, give them a try. Tradersway.com. Give them a try. Try it out. Is FX Bootcamp including the MT4, MT5 templates? Yes, eWild. or EWID? Yes. Okay. Some people paid $150 for them. Well, now they're free. You get them for free. Yep. So maybe that'll not, push you over, and you'll become a member of FX Bootcamp. Cool. All right. So let's take a look at the poll. Did you answer the poll? Did you complete the poll? A few of you did. Yeah, many of you did. Okay, so why don't we end it there? Okay, most of you are focused on the dollar, which is to be expected. But then, 34% Bank of Japan, and then a little bit of retail sales coming in and that. All right, so let's talk about the Bank of Japan. Here's the website, boj.or.jp. Okay. So you go here and you get the statement on monetary policy, which came out last night. Okay. And they're keeping their yield curve control, 0.5. And they left interest rates the same. Cool. Now, many market participants thought the Bank of Japan was going to change their policy. Okay. Wayne, does the MT4, MT5 templates have yearly pivot points? Yeah, I think so. Yeah, I believe so. I mean, look, when I reinstalled my MT4 not long ago, I just ran the installer like everybody else. So it's quite literally what's on FX Bootcamp. Now, I do need to find time to do an audit and go through and check all those things out and double check everything. But yeah, by and large, it should be fine. All right. So anyways, many market participants thought the Bank of Japan would raise interest rates or adjust yield curve control. Well, I met with the day trading group last night, and we discussed this at large. I probably discussed it a little too much. But I was pretty clear. I didn't see any evidence that the Bank of Japan was going to change their interest rate or their yield curve control policy. And that in my opinion, many market participants had already bet that they would change. And I'm like, well, I don't see any evidence of that. So I don't believe they would. And so I'm like, I don't know, there could be significant yen weakness. In fact, we discussed it at great lengths, or to such great lengths, that I said, I wouldn't even take profit. I would hold it. I said 100 pips wouldn't be enough. I used the analogy of baseball. I said, these are the perfect conditions for you to hit a home run. So don't bunt. Don't try to get on first base. Win the game. Can anybody confirm any of that? Was anybody there? Yep. Thank you, Jim. So guess what? Bank of Japan didn't change anything. Okay. Was that a guess? No, I don't guess. I didn't see any evidence that suggested they would adjust. Okay, and there's even a little bit of politics to it. How about this? Who's Japan's major competitor in the world of exports? Let's just think about it that way. Let's think of it as a business. Maybe you're not an economist, but maybe you're a businessman. Dude, FX chain, I don't know if you have a stutter, but I've already answered that. Yes. Thank you. I must need a cigar. It's been too long. Okay. The answer is China. Okay. Is China trying to contract their economy or expand their economy? I love it. We get so many different answers. Okay. The answers I'm going for are China and expand. Oliver says, what's my favorite wine? Well, it's not a particular vineyard, but it's a Châteauneuf-du-Pape in southern France on the Rhone River. In particular, something with a strong Grenache blend. Yeah, Jim. Yeah. So anyways, China is the major competitor for Japan. Okay. There was a time when you only bought Japanese because it was the best. And China was just cheaper. You can just get some cheap Chinese stuff, or you can get Japanese, but it was expensive. And so over time, that's changed a lot, and the stuff from China is just better. It's not cheap Chinese anymore. Gee whiz, I got something in my throat. It's in my throat. I got something in my throat. So anyways, so they're competitors now. Japan is trying to maintain, its exports, but if they allow the yield on the 10-year T-note, or let's just say interest rates rise, whether it's yield or interest rates, they are two different things. But if they allow them to rise, then the Japanese yen gets strong, which means to foreigners, Japanese products become more expensive than they used to be compared to Chinese products. And China is trying to they're trying to stimulate their economy. They just reopened their economy and they're trying to stimulate it. So, I don't know. I look at all this stuff and I'm like, why would Japan choose now to allow the Japanese yen to get strong? I'm not saying they won't do it. Okay. But why now? And so anyways, it's that kind of thought process. And it seems to me that many market participants bet. And I don't know how they get to the conclusion. Okay. Do they look at the outlook for economic activity? Look at the current situation of economic activity and prices in Japan. Like, they just don't read this stuff, and yet they bet. They bet. And I don't know why. It's unnecessary. And in fact, if you're a professional money manager of some sort or another, I would say it's negligent. Good morning, Brian. All right, so anyways, this is the short term, and Aussie and pound have gained. Euros all over the place. Kiwis gained, which is great because it's been weak for a while. And dollar, yen, okay, all over the place. Cool, so let's go take a look. Let's start with gold, oil, Bitcoin, and if you want me to do silver, I'll do silver. You let me know. Okay. With, oh, that's silver. Hang on. Here we are. XAU. Okay. Okay. Down into the moving averages. And remember, the space between the 21 and 55 is where you buy. Okay. Now, as you can see, I'm waiting for the potential short that might develop. It doesn't look like it's going to develop, but that's not what I'm guessing. Okay. It's if, or even when. It could be tomorrow. It could be 6 months from now. Okay. At some point, gold is likely to give back. So I'm just waiting for something like that. So that's what patience is about. But if you were buying along the way up, you know, it's this type of price action that you're looking for. And you had your up. Okay. You had your up last night. Okay. Cool. Right on. Art says, hey, Japan might want to contain their money instead of sending out of the country. Yeah, I imagine that might be true. Therefore, they're also willing to do low fixed loans for... Okay, that's fine. Don't let me forget about the news coming out, okay? So anyway, so I'm just watching. This is kind of an interesting area for a potential double top. It's not a prediction at all. There's nothing on this chart that says a double top will form. It's more like if it does form, then it becomes interesting if you're a bear. Buying the dip is great. You're way too late to do it now. So that's that. Okay, Jim says silver. Okay, let's do silver. Now this is the silver 4-hour chart, and I have it trapped. What I've done is I've grabbed all these tops. Okay, and that's definitely not a place to buy. Okay, if you're a bear, you could think about it. Okay, you could think about it if you're a bear, but I'm dumbing it down very, it's very, very basically not a place to buy. Okay, you see all those tops? I'm just grabbing all of that. So, not a place to buy. And maybe a place to sell. Okay, I don't want to sell in consolidation, but I could. Remember, the way I could sell this is I could sell up here, but I prefer to sell here. And you're like, Wayne, whoa, you can't sell down there. That's the buy zone. Oh, what I mean is I can sell here, or I can sell when that zone is a roll reversal. When it's no longer support, but instead resistance. So I could up here if I wanted to. I could here also if I wanted to. Okay. I'm not that aggressive yet because the other things I'm watching haven't rolled over yet. So I don't know. I'm still sort of wait and see mode. Okay, and then Bitcoin just kind of relaxing now after that giant move, huh? Damn. The sad thing is I had some Bitcoin, I don't know where it was. Probably somewhere in here. I had some Bitcoin and I exited. But, what can you do, huh? What can you do? All right. So, yeah. Okay. I'm watching the S&P 500 here. Obviously, we're going to get our retail sales data coming out. So that we need to watch that. But anyways, if I expand this a little bit. Okay. This is the number. Okay. I'm watching, and maybe it's more like if it rolls over around for this 4,000 mark. I have 40.50 really, 40.40, 40.48. If it rolls over around 40.48, I want to sell and probably hold for quite some time. We'll come back to all of this, by the way, after the news. That's why I'm kind of pushing through this. So I'm watching a potential top on gold, maybe top of the range in silver. Maybe, again, I'm watching maybe a rollover on the S&P 500. Okay? All that kind of stuff. So let's get back to, well, I guess we'll do exotics quickly. I won't spend too much time on peso. Apparently I spent too much time on it, but we were talking about this dropping many thousands of pips. Okay, and now we're below the monthly target, and I got another 100 pips and collected another, what was that, $1.50? It's about $1. Cool. So since yesterday, another chunk of pips. Cool. Letting it run, baby. Letting it run. All right, so let's get back to the dollar pairs, and I want to talk about the upcoming retail sales and what it means. So let's do that now. Let's do. Okay. Yeah. Here's the one. I'm so glad I had the patience and discipline last night. I would have lost money if I was a gambler. All right, so let's talk about CPI coming out. Not CPI, sorry, retail sales. Okay, we measure productivity through something called gross domestic product. Okay, and GDP is equal to consumption plus investment plus government spending. Now, if you have an open economy like the United States, you would also do import-exports. Okay? Cool. Anyways, this, right? What we're looking at today is C, consumption. And this is equal to 70% of the U.S. economy. 70% of the U.S. economy is the waitress at Applebee's collecting her tips, walking across the street and getting her hair cut at Supercuts. That's how I look at it. And who ate dinner at Applebee's? The mechanic around the corner. Or the UPS driver. Okay? Whatever. Locals. 70% is consumption. And so retail sales goes into that. Okay? So you get retail sales. Now, inside of retail sales, you might think it's like buying clothes at the Gap. Yeah. But it's also buying stuff at 7-Eleven. But it's also buying stuff at a gas station. And the reason I bring up the gas station thing is we don't track how many gallons of gas. That would be smart. We just count how much you spent. So if gas is going up or gasoline is going down, it impacts retail sales. And to me, it skews everything. Because you might say, oh my God, retail sales are way down. Yeah, well, gasoline prices have dropped significantly by like 50%. So wouldn't it be better to just track how many gallons of gasoline, right? But anyways, that's what's going into here. And this is why we care about retail sales. It directly impacts GDP.
Elements, so it is difficult and not unpredictable also future. So
All right. So we're just, a few seconds away finding out what's going on. Oh, 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 oh. Okay, I'm sure glad I stayed away last night and I talked about it. I said, I'm going to be right either way. I'll be right by selling if it makes a lower low, then a lower high. That would be the right thing to do. Or I'm not going to trade and it's going to go higher. And that is also the right thing to do, not trade. Did anybody get the number? I don't have the number. Thank you. CNBC hasn't even reported it. They're so focused on Davos. Okay, core. Still hasn't been reported by CNBC. Kind of amazing, actually, that they would just ignore it. Retail sales is pretty important. Okay. Oh, kicking off the pivot. Look at that. Do you have headline as well, Peter? I guess I could just pull it up myself. Boom. Oh, sorry. I guess I should bring it over here so you can see it. That's helpful. Boo, 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 boo. So what's the thought here? Has the Fed done enough? Have they raised interest rates to the point that they're killing GDP? Well, that's what we're trying to determine, right? Guess people are not buying cars, huh? Guess that's why Tesla's got everything on sale now. Look at that. That's brutal. Which tells you that most people borrow money to buy a car. What a dumb investment, huh? Up 6% above last year. Okay, so 6% above last year, but falling month over month. Okay. Total sales October through December, so fourth quarter, were up 6.7%. So it's still there. And remember, it's not necessarily that you bought more, it costs more. Because remember, it's the unit of measurement is dollars, not, how many Slurpees you bought or how many gallons of gas you bought, how many T-shirts you bought. It's too difficult. So what you do is you measure your unit of account is dollar. Remember, that's what money is, right? A store of value, a medium of exchange, and a unit of account. That is the definition of money. And in this case, we're measuring retail sales, and the unit of account is dollars. And so some of this is it year over year, Americans buying more stuff, or is the stuff Americans are buying more expensive? Cool. Yeah, look at that fall in autos. Huh? 2 months in a row. Cool. I guess I'll give this to you. You want it? I don't know. So I suppose we're going to get a negative number, and that tells everybody the Fed doesn't need to raise interest rates any higher. And then you look a little deeper and you're like, oh my God, it's still, more than 6.5% higher than last year. So maybe the Fed still has to do more. So, this is where you get your volatility. Key takeaways from this report. I think the most interesting thing is you can walk away and say, well, that's the projected weekly high. This is the projected monthly high. And boy, that looks interesting, doesn't it? What I'm thinking of observing is I'd like this to come down to the 55, come up, and then maybe I get an opportunity to sell it later today or tomorrow. Same plan as down here. So I'm just going to move this plan. Remember, that's not a failed plan. Why is it not a failure? Because it's an if-then. It's not a prediction. If-then isn't about probability. If-then is if it actually does it, then you actually sell it, right? There's 100% probability. If it does it, then you'll do it. So not a prediction, not a probability. Do I believe recession is coming? Yes. By the way, I've answered this. I answered it with a 2-hour answer. And I said yes to the question, do I believe a recession is coming? The issue is time, and I say later. I think the worst will be in the second half of the year. Okay? Possibly. And I read stuff like that into this price action like, okay, retail sales is negative. So, oh my God, that's it, right? The Fed's going to pivot and cut interest rates. And then you read a little deeper and they're like, oh my God, but we still have high inflation, right? And all of a sudden, and you get this action where there's still a lot of people betting, right? I look at that and it feels to me like people are betting. Maybe I'm wrong, but it seems to me people are betting that the worst is over. And they're not looking at the details, but maybe I'm overthinking it. That's possible. But I look at the details and like, it seems to me that the Fed will have to continue raising interest rates. We're not near a pivot. We're not near a pause. And so that all goes into the theory. But I don't know the future any more than you do or anybody else. But I also don't have a knee-jerk reaction of like, oh, retail sales, -1. Is it -1 or is it plus 6.5? 6.7, I think it was. So I'm like, okay, -1.1. Okay, great. But it's still plus 6.7. That's a big number, dude. So anyways, we got to pay attention. Got to pay attention. Now, this is something that I wanted to short over the last few days. Sure glad I didn't. So over the last 2 weeks, I think I very successfully have taught FX boot campers how to not trade. Not like a wrong way to trade, but I've had some plans that didn't come to fruition, but I also didn't trade those plans. Usman says, hey, if there's a recession, what happens to the price of Bitcoin? Well, what if you're starving, Usman, or your children are starving? You've lost your job. What do? How do you feed your kids? You sell your assets. You have a garage sale. People come to your house and pick through the rubbish you've collected over the last 30 years. Hey, how much for this Harvard degree? $5? How about $3? I'll tell you what, I'll meet you halfway. How about $4? $3.75. All right, done. $3.75. Boom. Okay. You sell whatever. If you own some Bitcoin, you sell it. Now, the interesting thing is this happens to professional investors as well. What do you do if you own a bunch of stock and the stock market drops 25%? You got to make up the loss somewhere, and you end up selling your good things. You sell anything. You sell whatever can be sold. So anyways, that hopefully answers the question, Usman, where if there is a recession, does Bitcoin go up or down? It goes down because you need to feed your kids. And you sell anything that can be sold. If it can't be sold, we call that illiquid. So anyways, too bad on that one. I gotta wait. Let's go back to my peso trade. And not a big move at all. I thought it would have a bigger move. That's interesting. It's actually going the other way. Interesting. All right. Interesting. All right, let's go back, take a look at some commodities. Silver hasn't done anything. 81.5 on oil. Yep. Gold, kind of just hesitating. Very interesting. Bitcoin, just kind of hesitating. Up. Big wicks. Okay. Of course, I'm looking at them on, that's a 4-hour candle I'm looking at. If you're a buyer, you should know, right? You should know that from here to here, you're looking for opportunities to buy. Okay. So you could have a series of limit orders. For example, if you're a buyer, you're looking for this type of price action. What? Okay, remember, if you're a buyer, you buy higher lows. And these moving averages are a guide. So right now, there are all these prices in here which could be a guide. So if we went up to 1925 and then came down pretty close to 19, okay, you want to buy a dip. It's just that. Now, of course, now you're doing it pretty late in the game, as you're approaching a top. You don't really want to buy a bottom, but you didn't buy down here. So now what do you do? Okay. You'd probably want to drop into a smaller time frame and try to, force the trade a little bit. And so you can see quite clearly we're riding the 5 EMA on the hourly. And sometime in this hour, you had an opportunity to buy the 5 EMA. Cool. And, you probably want to continue doing that the rest of the day. Or if you really want to be sort of prepared, you play the idea that it's going to hit that and get rejected short term, and then you buy a dip after that. And that would be setting up tomorrow's trade. And that's how I teach you to think. Okay? Trading this candle, to me, is really irrelevant. You're not much of a market participant. Okay? But instead, you're trying to trade a trend, and your analysis, your fundamental analysis, would indicate that you should be a bull on gold. Maybe. I don't know. That's if you're buying dips, you're a bull. Why you're a bull? I don't know. You did your research, right? But in that case, there's two things you would do as a bull. You'd buy a higher low, and that would happen in the next 24 hours. So that's what you're setting up now. Or it breaks. It breaches the high. And well, you expect that anyways because you're a bull. Okay? And you have, I suppose we'll make this plan A, because if you're a bull, you expect it to breach. So let's do plan A. And then plan B is down here. And that's how you trade it. So you either buy a dip tomorrow or later today, okay? Or you buy a roll reversal, what used to be resistance is now support, once again, later today or tomorrow. And that's how you trade. Okay? And ideally, these are happening around market opens or closes. So you might be at A or B. So let me actually just put it down here so it's a little more clear. Okay, A is in here, A. So A or B could be Asia open or even better, London open. Tomorrow, I'll trade you tomorrow, right? Today is passé. Okay? I hope you join FX Bootcamp so I can teach you how to trade properly. Huh? Right, Art B? Yes, I have, Bradley. Yes. Do I consider this type of software legit? Why would it not be legit? Yeah, Art B, yeah. Cool, right on, Art. All right, Bradley, Wayne, you have businesses that have developed software that can give perspective on seasonality and how the institutional investment hedges or banks are placing their money. Yep, long or short, yep. Do you consider this software legit? Yeah, well, yeah. It's real. I mean, what do you mean legit? Yeah, it's real. So when you look, right, you look at total orders. Oops, let's do this in black. Okay, you have total positions on an exchange. Total orders. I'll just put orders. It's easier to spell. And orders. Okay. And it's hard with this mouse. Okay. You have total orders. Okay. Minus hedgers. And that's a known number. So you remove that completely. Then the next thing is speculators. How do you know they're speculators? Because they're not registered with the CFTC or the IRS as bona fide hedgers. So therefore, they're speculators. And remember, the exchange sees the total orders, and the speculators and the hedgers are required to report their positions once a week. So we know this to be fact. This is factual. Okay? So this is where we get positional data where I can say, well, hedge funds, aka speculators, are positioned long dollar but short silver or something, whatever, right? This is known information. But the thing is, when you take the total number of orders and subtract this, there's still a number of orders. There's still a positive integer. Okay? Total minus, there's still a positive number. So what is it? Well, they're not hedgers, because remember, they're not registered at the IRS or with the CFTC as a bona fide hedger. They're not a speculator, because they would be in this cohort of positions. So what are they? They're non-hedgers, non-speculators that are non-recorded because they're small. They're small traders. It's retail. It's retail. They're not institutional investors. They're not required by the CFTC to be registered as a hedger or a speculator. They're pissy little retail traders like you and me. Okay, Bradley? So that's where you get that data. They're the orders, okay, that are not required to be reported, but we know the orders are there. So now we know that what we do is we remove this because it's irrelevant. We know this, and we know why they're making their trades. They're trying to make money. And then there's these leftover trades, and we know what they're doing. They're also trying to make money. They're certainly not hedging. And that's where we get that kind of data. So I can tell you, because it's reported by the government and with some simple math, figure that out and show you which way institutional investors are investing and which way retail traders are investing. And very often, they're significantly different. And in particular, it's important when they're significantly different. Oh, you want to see? All right, sure, hang on. Hang on. It's so easy when everybody's trying to please me, baby. Yeah, easy, Bradley. I got you, bro. I want you to know. Hang on, loading. Okay. Remember, it's not a web page. I'm actually gathering the data in real time. So I'm on the Google Cloud. Notice it's not a web page. I have all this information. And I can go to this, okay? And this is the retail positions, long and short, for including S&P 500, DAX, okay? FTSE, all that kind of stuff. And here's the institutional positioning. And we get it from that page is derived from this page. And again, it shows platinum, oil, gold, euro, dollar, okay? This is institutional positioning. And you have total positions, long, short, okay? And then we create baskets of long and short as well. But using this data, which again, this is factual data, we reorganize it so you can see it this way, which just very quickly gives you long and short. Okay, so retail is very long CAD Swiss franc. And they're very short Kiwi CAD. Now, does that make them right? Not necessarily. Right? Not necessarily. And then the other way that we show this data is when you pull up an actual currency pair, we show you, like, for example, nice and easy, if you look, oops, delete. If you look at this area here, okay, on euro dollar, almost everybody is short. Okay? Retail. Now, you look at here, and now we're looking at institutional. Okay? 70% of institutional investors are positioned long. Okay? And 66% of institutional investors are long dollar. They're long both dollar and euro. So I wouldn't trade this if I were me. And oh my God, I'm not trading it. Okay? So, yeah. That's how the Wayne do. Bradley says, is this my data or available to everyone? Everyone. In fact, I'm going to try to focus it on this week. So maybe next week. I'm going to work on it even today. I'm going to give you a presentation on how you can do all this for free. Because you're supposed to be doing this anyways. And in fact, directly and indirectly, I've been teaching people for 20 years on how to do it for free. Okay? So if you don't have any money, but you have lots of time, AKA you're poor, I'll show you how to do it for free. Because you have the time. Cool. I will show you how to do it. But if you're like, oh my God, Wayne, that's awesome. And I appreciate that I can do it for free, but it's so much frickin' work. I'd rather just pay you the money. Well, cool. And I'm going to price it not very expensive. So I'll probably officially launch it next week. I know I've said that a million times, and I'm sorry. But I'll put it together and I will show you how to do it for free. Okay? But if you'd rather just pay money, I can help you do that as well. So if you've been trading and finding that you're not getting the results you want, you might be trading the wrong thing or you might be trading the right thing at the wrong time, or you might be trading the wrong thing at the wrong time, or whatever. I hope so, Jim. I hope so. Yeah, I'm being silly. I got too many things going on, but it's legit. Is it legit? Yeah, it's really legit. Yeah, and Bradley, that's it. Like, really, Bradley says, I'd rather understand it in detail. So I don't know how long the presentation is going to be. And there's a bit of a sales pitch to it, so I hope you don't mind. To me, I think that's kind of a fun. I'm having fun putting this presentation together, even though I take 2-week breaks at a time. There's definitely going to be some salesmanship to it. But the point of the presentation is to drive home the importance of what the data is. It's a million times more important than buy this, sell that. And so for me to really pull it apart and show you, I really have to explain in great detail what it's doing. And the only way I can do it is show you what it's actually doing. Show you how to do it yourself. And then you'll be left with a choice, right? Do it yourself or have an algorithm do it for you. And we all have different choices. If you don't have any money, well, then you got time. Do it yourself. If you don't have much time, but you have some money, well, then have the algorithm do it. It's okay. We're faced with that choice all the time. That's what economics is. So I will help you. Remember, my underlying goal is I want you to succeed. So I will teach you how to do it yourself. Yeah, right, Aaron? Cool. So I will work on that today. In fact, I think I even have the presentation up to remind myself. Ha ha! Ha ha! Whoa! Did you see it? Oh! Huh? Tyler Durden? All right, so that's that. That's that. I guess we're done for the day. Has the algorithm taken into account today's retail numbers? It updates, yeah, not real time, but close, like depending on the numbers it's looking at, it's updating. Where's my, did I kill it? No, here it is. It's constantly updating. So like if I look at the heat map, for example, this last update was 9:05 a.m., which is right now. So this is live. And so the best performing asset is the Japanese stock market, followed by oil. Oil is up 1.5% today. Like right now, it's up 1.85%. And yields are falling. Okay? So the Dow is down 1%. Oh, more than 1%. See, this is all real time. So do we have the retail, right? Well, it updates, right? But they all, remember, it's pulling from all kinds of different data sets. So it depends on the APIs. Yes, Maida, I did write when I was in Cuba. Yeah, I did write. I wasn't there long enough, but I did write. I really enjoyed it. Okay. So anyways, let's go. Peace on earth. May the pips be with you. May your profits be above average. Today is Wednesday, so if you're in my day trading group, I'll see you at 4 p.m. for the U.S. close to set up tomorrow's trades. Okay. Remember, tomorrow we'll meet at 8 o'clock in the morning, and then we'll meet at 4 in the afternoon for the swing trading group on Thursday. And that's the swing trading group and the day trading group getting together as one big community. So, right? And then Friday is another great trading day. So we'll have plenty of opportunity to gather as a community. So thank you for being part of Forex.Today. Please consider joining FX Bootcamp. It's not very expensive and it will help a lot, I promise you. And also consider Trader's Way as your foreign exchange broker. I'll see you.